Welcome to the world of crypto trading, where charts are your new best friend. You open an exchange, see Bitcoin or Ethereum, and there it is, a chart full of squiggly lines. It looks confusing, but these lines tell a story about price history and market battles. Think of it like watching a sports game. You don't just care about the final score but the plays and momentum. Crypto charts give you the play-by-play of buyers and sellers. By learning to read them, you move from guessing to making smarter, more strategic decisions. No one can predict the future perfectly, but traders use tools to analyze these charts. This is called technical analysis. It's not about understanding every detail of a crypto project. It's about focusing on price and volume. All the news, hype, and fear are reflected in the price. Your job? Learn to spot the clues in the chart. Technical analysis empowers you to navigate the wild crypto markets with more confidence. We'll skip the complicated stuff and focus on the basics every trader uses. By the end, you'll see more than just random lines. You'll see the story the market is telling. Ready to decode the squiggles? Let's get started. Next, let's break down what technical analysis really means. Transition to Scene 2. Technical analysis, or TA, is like being a detective at a crime scene. You don't need to know a project's backstory, just the clues left behind price and volume. TA is built on the idea that history repeats itself because people react in predictable ways. By spotting patterns that have happened before, you can make educated guesses about what's next. The main tools? Price charts, especially line and candlestick charts. Line charts show the overall direction. Candlesticks reveal more detail. Open, close, high, and low prices. Green candles mean price went up. Red means it went down. Think of TA as the market's language. Charts are the pages, patterns are the words. By learning this language, you can read the market's mood, bullish or bearish. It's about analyzing evidence, not guessing. Now let's talk about trends and volume. The trend is your friend, one of the oldest rules in trading. There are three trends: uptrend, higher highs and lows; downtrend, lower highs and lows; and sideways, price moves in a range. Uptrends show buyers are in control. Downtrends mean sellers dominate. Sideways means indecision. To confirm a trend's strength, look at volume, the amount traded during a period. High volume means strong conviction behind a move. Low volume means weak momentum. A price rising on high volume is bullish. Rising on low volume is suspect. The same goes for downtrends. Heavy selling on high volume signals real fear. Volume is the fuel behind price moves. Use it to judge if a trend is likely to continue or fizzle out. Next, let's unlock the power of support and resistance. Transition to Scene 4. End of Scene 3. Scene 4 begins. Support and resistance are the floor and ceiling of price action. Support is where price tends to stop falling. Buyers step in. Resistance is where price struggles to rise. Sellers take profits. The more times price bounces off these levels, the stronger they become. For example, if Cardano keeps bouncing at 40 cents, that's support. If it keeps falling at 60 cents, that's resistance. Traders buy near support and sell near resistance. When price breaks through resistance with high volume, that ceiling can become the new floor, a bullish breakout. If price falls below support, that floor can become the new ceiling, a bearish breakdown. Identifying these levels helps you plan entries and exits. They're simple, powerful tools for every trader. So, how do you put all this together as a beginner? Transition to Scene 5. End of Scene 4. Here's how to use what you've learned. Start by identifying the overall trend on a daily or weekly chart. Trade with the trend. Buy dips and uptrends. Be cautious in downtrends. Use support and resistance to plan your buys and sells. Don't buy randomly. Wait for price to approach support, and consider selling near resistance. Remember, technical analysis is about probabilities, not guarantees. Always manage risk. Never invest more than you can afford to lose, and use stop losses to protect yourself. Practice by watching charts and paper trading before risking real money. Build your skills and confidence over time. The market isn't going anywhere. Stay curious, trade carefully, and good luck.